traders, to a new session of Charting Across the Board. A brief one today, Friday the 18th. I wanted to start with a stream or this title between the differences between trading and investing, giving the request or the comments among some members in the group. Marco, after reading your comments, I wanted to point out a few differences. I'm sure many of you already know that the two differ between the time frame. The time horizon is what makes these two strategies also different than the other. Of course, investing often implies fundamental analysis, learning, doing researches, due diligence about certain companies. However, in the case of cryptocurrencies, that can be also applied in a similar manner, knowing the project, either for, as we're talking, Matic, Cardano, and many others. But again, the main point, to put it into an easy perspective, the main difference is the time frame, as the two of them boils down to the strategy and mindset. And ultimately, of course, to generate profits by taking advantage of the moves, either with trading, that can be a daily session for day traders, as well as swing trading that can apply between a few days to weeks. And of course, when we're talking about investing, that often requires a long-term projection. A midpoint will be between 3 to 5 years, and the long-term, either years to decade. However, the point here on investing will be to build wealth gradually through long-term appreciation. Now, if we apply that rule into trading, for example, we can have many discussions, disagreements, but to me, particularly, all of these are subject to the time frame and also when to act upon this information to either buy or sell. Which, by the way, to make a new disclaimer, none of the comments here represent any financial advice, only an interpretation from a technical perspective only, from my point of view, okay? Each one of us may have a different approach, but we want to give at least a general idea to what the difference between the two are when it comes to trading and investing. Ultimately, of course, we want to capitalize on the moves, okay? However, investing comes into long-term projection. To start here briefly also, to bring the point on Matic, since we're already starting here on this topic, let's go into Matic also. We're going to be navigating into a few different instruments, having the approach to investing, okay? Applying the recent leg of the move from even last year, December of last year, okay? If we were approaching the market from an investing approach, okay, despite the new lows, it's very important, my friends. Here, if we were looking at buying for long-term projection, we can observe that prices on Matic from December highs, 70s to 60s, are now way below those levels, okay? There was a decline across many altcoins, depreciating between 50 and 80%. So this is where the complexity between these two approaches becomes tricky, complex, correct? Why? Because if we're looking for buying opportunities, DCA per se, dollar cost averaging, buying each time prices are lower, an investor, as a case study, will be potentially 65, 66% to current levels, okay? But again, if your projection is between 5 to 10 years, then of course that projection may be much higher levels, right? If you're, of course, believing in the company, for example, this is a project, we know that there are still differences between the crypto space as well as the equities market, right? Where there are true companies delivering real products. However, the promise of Bitcoin or the crypto space was that some of these projects will eventually provide true products, right? We haven't seen that yet for now. We might be heading to that horizon, but as of now, in my particular case, I've been focusing only on trading these instruments, whether this is equities, cryptocurrencies, metals, and other trading vehicle. Okay, so pretty easy. Once again, investing versus trading. Trading implies short-term moves. Investing implies deeper research, fundamental analysis in theory when it comes to investing in real companies. That can be applied here also into cryptocurrencies. But again, you have to do your own due diligence before being invested per se. Now, starting with Matic pretty briefly based upon requests, one of the members, there was a variation of an information. You can observe here a pseudo butterfly on daily time frame printed at the 172, which bring the analogy now once again between investing versus trading. In this case, these to me are now lower risk levels where the risk can be easily mitigated on spot positions, correct? But we always need to be aware of our risk appetite, okay? Why? Because if prices go lower, we need to be able to manage risk accordingly, unlike this previous high prior to this major decline. I believe the prices on Matic, let's put it into an example, like many other altcoins, was 80% decline. So once again, the time horizon is a key difference between these two approaches. I hope everything is running in the background. I believe there is some issues with my microphone. I hope that's not the case, but I'm gonna try to go over. Hopefully this is only on my end. If not, I'm gonna try to do another one. Moving into the price action for Bitcoin, nothing has changed for now. Everything remains the same for now, once again. And we are approaching the intersection between price and time expected for tomorrow, July the 19th. Could be a day before, today, or a day after for July the 20th. Following July the 19th, we are also having August the 3rd for key turning points in the market. So these two dates are key levels or key dates to monitor for a significant turning point. We'll see if this is either a continuation towards the upside or a turning point, at least a breather of this upward traction that already took place since April, okay? Now, moving into the price action for XRP, I wanted to point out here some levels that I'm monitoring on the S&P, comparing these two different instruments, giving the similar patterns. We're looking yesterday at the W formation, and I was mentioning that I wanted to monitor the reaction at the daily session close of the 0.886 before acting upon it. However, prices blasted through and tested the 1.13. The 1.13 comes from these lows or these highs, the previous highs, to the lows, which is known as the hub level. Ideally, within the harmonic framework, this is the PRC for this, for the secondary or complementary PRC, the hub level, another execution point if prices violates the 0.886, okay? But again, it becomes tricky when the PRC does not deviate from the ideal turning point. However, we tested the 1.13 where in a similar manner as XRP, I wanted to move into the price action for the S&P 500. Why? Because we know that there is a daily pattern, okay? Here, starting on the hourly, briefly, we have another shark. We were monitoring levels yesterday. If you guys remember, it was the 0.786. I hope my microphone is not creating any issues. The 0.786 for a cipher, the 0.886 for a shark, but the extension is a 1.13, the last one, between the legs X to D is once again at the 1.13, known as a fail wave, okay? Clearly some reaction as of now, turbulences in the price action, but this pattern can also be the precursor of a bullish 5-0 if a correction from the legs C to the D tests the 0.50 and the 0.618. Okay, that would be ideally if it's indeed a continuation structure for a new support. However, this is based on the hourly time frame, clearly some turbulences. However, on the 4-hour time frame, there's also another pattern known as an ascending or right angle, an ascending Browning formation, which also is known as an expanding diagonal based in terms of Elliott wave. You guys know I'm not an expert on Elliott waves, but I do know the basics, some of the common practices or the common patterns within the Elliott wave, as these also represent similar patterns as the one from Bukowski as well as Richard Schubacher. Pretty much the same pattern, different names, but there are rules, metrics, and certain behavior that these patterns may perform. In the case of this expanding diagonal, what I read is that they normally form at the 5th wave. The 5th wave, if indeed we are within the last leg of the move, from the entire segment of the move, from April lows, the first wave, the wave 2, the third one, which ideally is the largest one within the count, the 4th, and now the 5th, where, in theory, once again, the expanding diagonal is normally perceived at the 5th wave with a throw over from the legs, from the counts, from the 1 and 3 waves in this case, okay? We can observe clearly an overthrow here, or throw over, similar, same formation, and now a decline. Ideally, prices go back to the lower point before heading lower, okay? So this is why, unfortunately, I did not manage to execute the short position yet. I just got back. But nevertheless, this is the same zone within the 6350s. As of now, it is hard to execute the same or the main level, correct? But as long as we have new information, if price continues to decline from these levels, we then know that this level is indeed a resistance. Therefore, if we have a decline, another lower high, that will then be an area for me to at least try another execution, understanding the risk mitigation levels to strategize positions. Okay? So once again, on the daily time frame, the idea will be that this is an expanding diagonal, and the turning point will be pretty much here. Okay? There is a throw over between the legs or the waves 1 and 3. The 5th often prints that throw over, which has been the case. By the way, repeat, I'm not an expert on Elliott wave, but I do know some of the basics. Okay? I'm only combining different technical approaches, and this is a similar pattern that is perceived over and over. A right angle in ascending formation often also yields either continuation towards the upside if there is new support levels in the event of a 5-0. Okay? Another correction towards the 6300 or 6312. It will depend. However, we do know that the daily time frame is entering overvalue conditions, okay, and also now printing divergence. One of the criteria also for this 5th wave for the expanding diagonal. They often print also divergences, which we can observe here a negative divergence. Lower highs in the RSI and higher highs in the price action, okay? The comparison between XRP, the pattern, here on the bad pattern, this is based on the daily also. I wanted to move here on the S&P 500, comparing that the 1.13, if that were to be the case, is the hub level, okay? The harmonic optimal price, where in theory, if the 0.886, the ideal turning point, does not generate a key correction, we then have potentially an argument for the 1.13. The highest point will be 64.61, but again, that will be on the daily. As of now, we did know that this W formation has been there for a very long time, only creating some turbulences in between, a harmonic pause before printing a new high. But again, within the harmonic framework, there is a hub level that can go to the 1.13. Not necessarily to touch precisely, but we're hovering those levels. This will depend, of course, of new information, whether we're heading higher and the V-shaped recovery is indeed here penetrating the previous high decisively. Okay, my approach, we're entering overvalue conditions across the board. Therefore, August is the next month to potentially perceive some turbulences in the price action across equities and BTC or crypto in general. Now, the support of those levels will be also very key. Okay, if new support levels are defined, we then know that the common areas of retracement, in this case from the lows to the highs, will be at the common levels, the 0.382, 0.50, and 0.618, as you guys are already tired of listening to the same levels. But those are the basics for true support levels if a new trend may be developing. Okay, everyone, I'm going to have to end the stream as I'm listening some clipping, some bad noise in the background. Again, I'm hoping this is only on my end, but ideally I wanted to portray all the differences between investing, trading, key levels, where we are on the price action for the S&P 500, among other instruments, XRP and Bitcoin. Nothing has changed on the macro. Not on the macro, but from the levels we printed yesterday, or we mentioned yesterday, we're within the same range, okay? Minus XRP that printed the HOP. But again, this now become a key level. True support levels will be defined if the previous high at 340 now becomes support. But again, we're observing some tail or some upper shadow or either a shooting star. We'll see. There's still many hours left before the session closes. As of now, the only argument I perceive on XRP is once again the HOP. Of course, also to mention, failed bad patterns as well as failed garlies often mutate or morph into crab patterns, okay, for the 1.618. But again, we need to manage the extensions, which the first one, the failed wave known for the 1.13, has been tested. The next one, 172, 388, and so on, okay? But each of these levels represent key turning points based on the extensions, okay? Of course, that might be a breather, extremely overvalued conditions. The 4-hour time frame also in XRP did not change much. Divergences remain there despite the new highs. But we'll see if this is indeed a new support level being printed. Consolidation range before true support levels before advancing towards the next move. Everyone, thank you for being here. I'll see you guys on the next one. I only wanted to go over these levels in the price action for this instrument and present the differences between the two. I'll see you guys in the next one. Have a great weekend, and I'll see you potentially on Monday. Cheers, everyone. Bye.